Good morning, welcome to the Fit to Flourish podcast. Let's talk wellness, finance, and growth. What's up, guys? It's Mr. Fit to Flourish, and today I wanted to talk about the price action that allowed me to make 3.5K today in terms of trading and trading on the QQQs. So, as you know, I trade options, and today I traded 0 DTE QQQ call options. What is a call? A call is a bet that price is going to be moving to the upside. So let's get right into the charts. Boom and a bang. All right. So right into the charts, we're looking at the Qs. So today was CPI as well as jobless claims. So what is that? It's an economic indicator of how the economy is doing. So it's an economic indicator, and the Fed, or pretty much the governing body of federal policy and rates, they are really looking at this data. Okay, they're really looking at this data, and it caused the markets to open lower today. Okay, the data came in worse than expected. However, investors are still optimistic that we'll get a rate cut, which is good. When you have rate cuts, what happens is you're paying lower rates on loans, and the banks are paying borrowing from each other at lower rates. So then that then passes on those lower rates to their customers, which is you. And if you're paying lower rates on houses or on these loans and on credit, then you're going to have free money. And that free money is going to go where? Into the markets, into crypto, into all this risk on asset type of stuff. Okay? So the market was pretty much betting that we would still move up today. So we gapped down. And what happened was, this sell zone, this yellow line is the sell zone. This 490.74 level is my key level. And it looked like we were rejecting that sell zone. But then we created what's called an over-exhausted bar. When bars are really, really big, it's one sign, a major sign of an immediate reversal. So it means that there's a lot of imbalance to the downside, a lot of imbalance to the sell side, and it's pretty much a fake sell, pretty much a fake sell-off. Okay, so then we created what we talk about every day: micro double bottom side wick, showing you buyers are stepping in. This is a nice bullish trend bar followed by another nice bullish trend bar. Once we reclaimed that 490 level, what we did was we went to the 15-minute time frame to see what really was happening. And if you look at the 15-minute time frame, it looked like we were actually respecting that key level, holding that key level. So then we went back to the 5-minute time frame to trade and get a good entry. So I was like, you know what? I'm freaking looking for calls here. We held this level. We're about to hit the 10 a.m. reversal time, and we went from going down to going up. I entered a little prematurely, okay, because we want to wait till we break above key levels, but I entered a little bit prematurely. I entered here on this trade, and I will show you exactly why in a second, but I entered right here. Nice bull bar to the upside, and also coming from that low, we're holding that level on the 15-minute time frame. But what did I talk about yesterday on the volume RSI? Oh my God, we had a massive upside curl, massive momentum. So the volume RSI, what it does is it's a relative strength index, RSI, but it shows you the relative strength of volume. And when it's moving up, it's basically showing you that there's a lot of upside momentum. Okay, a lot of upside momentum. So stocks were moving up here, especially QQQ, and there was a lot of momentum. And we were also crossing above the 9MA. And then we were also getting out of this area of resistance. We didn't quite get out of there yet, but I had a feeling we would, because that momentum would send us up. Okay, so I prematurely entered, whatever. I took the risk, okay? My stop losses, I always keep my stop one tick below my entry. So if we broke below this, then I know that the play's cooked. And the reason I like this stop too, when I saw this play, was it's right where the key level is. So if we break below the stop, we'll also break below the key level, which would mean that we would be falling to the next key level. And we didn't. So I took that premature entry. And the options prices early in the day were fluctuating so much just because there was a lot of volume, that when I got in, it was kind of like staggering, teeter-tottering, went down. And then all of a sudden, we got this huge push to the upside. And I pretty much exited on the top of this wick up here. Okay, I saw that we were hitting this this structure here. And not only that, but I liked my profit. My profit was up near 35%. And I'm always looking at the percent gains when I'm getting in on these plays. Okay. So I was up a couple bandos over here, up a couple bandos. Then what happened was we started to consolidate here, and I was looking for a re-entry. Okay, I was looking for re-entry. And we were just consolidating along the sell ATR, creating these huge bottom side wicks and top side wicks. So the next step here is, if you ever see consolidation, you draw a consolidation box around the closes, the high closes and the low closes, okay? Not the wicks, the high closes and the low closes. And then once you get a breakout above that range, that is fair for an entry. Essentially, I didn't play this correctly. I ended up getting in on this, I call this a slingshot doji. I saw that we had massive momentum here on the, right here on the volume RSI. Momentum was picking up again. So I ended up prematurely entering. I need to work on this for the next play, but I prematurely entered here, which is not good because I didn't capture the entire play as I should have. But entered here, there was a lot of teeter-totter. I went down for a little bit, and then all of a sudden we had this huge upside rip, and I ended up exiting again at that key level because I didn't know if we were going to break. I thought we were probably going to get another wick and a rejection there, but again, ended up doing pretty well from that move, 491.46 up to 492.26. Now, don't follow that entry. Again, the best entry of the day would have been after a breakout of this range. Okay, so we broke up above the sell ATR, we retested it, we kind of consolidated where well we did, and then we had a nice bull bar break above that range. Okay, not only that, but we broke above this support resistance flip. So this was support here, support, and then it turned into resistance. That's how you know where key levels are, where there's a support area that turns into an area of resistance. Okay, anyways, we broke above that area with this nice bull bar. Excuse my cough, oh my gosh, it's not going away. Anyways, with this nice bull bar, okay, we broke above that area. So the best entry of the day was actually after this bar formed, entering right here. And we held what's called a Wall Street hold level. We held that hold level right here. Where we also, at that point, we got a 920 crossover. I talk about this a lot. When the 9MA, the pink line, crosses above the 20MA, the yellow line. When that happens, you typically get a massive market structure shift. So you start from going down to going up really, really fast. Not only that, but what else tells me to get in? Again, look at this momentum. We are flying. We're super high, above 70 on the volume RSI. So all of those signs tell you to get in. This is a really good consolidation breakout play. Okay, 920 crossover, nice bull bar, trend bar. We hold the hold level, big momentum on the volume RSI. This is all the signs to get in. Okay, and if you're a beginner trader, then like literally just look for consolidation breakouts or something like that. Look for breakouts or look for something pretty easy. And if you don't see it, don't trade. But if you see it, you'll get in this trade. And that's where I should have. Again, I could have re-entered here. Okay, I should have re-entered here, or I should have waited literally the entire day and just got into the trade here. And I would have been absolutely golden schmolden, because this is where the biggest move of the day happened. Massive upside move. We had a scary bottom side wick here that kind of knocked people out of their plays. This pretty much hit a lot of stops here. But then we had a nice continuation as we held the 9MA and broke above the 493.19 key level, moved all the way up, created a micro double top side wick. Top side wicks show signs of sellers stepping in. Micro double tops are signs of reversals. This was a bearish piercing line bar, basically meaning there's enough selling pressure to take over this buying pressure, because it pushed more than 50% of the way down of this upward move. Okay. Then we had pretty good continuation to the downside, massive continuation to the downside multiple times. And currently, as we speak, we're putting in a double bottom here and moving back to the upside, breaking back above that key level at 493.19. Okay. But yeah, overall, this is a pretty good example of, hey, how do I take trades? The trades that I took today were kind of more of scalps, but they're based on things that I was seeing on the charts to make quick, big money. But I could have made tens of thousands if I would have entered on those on that breakout. Like I showed you the structure. We started to consolidate. We broke above those highs. That is a clear sign of what's called a breakout. Okay, and then we ended up rippy Rapewski to the upside. But essentially, today we still made some money, and that's why we review these charts to see how we can do better the next time. So persevere, continue to study the charts, continue to study different these stocks. Pick a handful of stocks to learn and to trade every single day. Understand options and option Greeks. A lot of people don't know the option Greeks. Understand your delta, your theta, your gamma, the IV, how that all affects the options pricing and which options to choose. Because you could know how to trade, like where to get in, where to get out, but then you might just be choosing the wrong options. I know some people are choosing options that are way too far out, and some people are choosing options that are already way too far in the money. It's not going to make you any money. Okay, so understand where that golden spot is for you and for your style of trading. So without further ado, it's Mr. Fit to Flourish. Hope you enjoyed this one. Any questions, drop them in the comments, and I'm outie.
Process of the grind that shapes you and forms you is not the game. You think you become a champion on the field? You don't. You become a champion when ain't nobody watching you. You're doing your own drills in your own way. You're doing what coach tell you to do, and you're doing your own stuff. You become a champion in the dark when ain't. It is the